Just before summer vacations are about to begin, your dream vacation abroad is all set to get dearer. From the 1st of July, if you use your credit card when in a foreign country, you will have to pay a 20% tax. This as the government has changed the FEMA rules to bring overseas international credit card spending under RBI's Liberalised Remittance Scheme. What this basically means is that if you wish to spend more than $250,000 in a US currency, you will need a prior approval from the RBI. Moreover, foreign credit card transactions will attract a higher tax collected at source at the rate of 20%, which goes up from 5% that it is right now. The centre has clarified after a lot of backlash to this decision that the new rules do not affect any changes in the use of international credit cards by residents while in India, and there are several exemptions that are also in place when it comes to expenditure on medical treatment and educational purposes, as well as the limit of money that has been spent. But still there are those who have now come out to call it tax terrorism. What was the need for such a change? What was the problem with the structure of taxation as it existed earlier? Several other questions being asked because it directly impacts the common man, at least the middle class and the upper middle class, mostly a duly, diligently tax-paying class. To help us answer all those questions, I'm now being joined on the broadcast by Kailash Adhikari, who's a MD of Governance Now, Bijon Mishra, consumer rights activist, also on the broadcast, Ankit Jain, partner, Ved Jain and Associates, Dilip Cherian, founder, Perfect Relation, is also with us, and we are also opening our phone lines for our viewers to join in. Tell us, why do you think that you would be scared of this change? But first, I would like to ask Bijon Mishra, who's a consumer rights activist, what do you make of this change?
You see, we all know as citizens, Priya, you'll agree with me, that we all have to pay taxes because the government has to function. So we are all more than willing to pay taxes. But we never like to pay tax on tax. We pay tax and then you again charge another tax to collect money. You have already done a budgeting. You have already laid out a budget for the year. You know how much to collect, how much to spend on what. And then you suddenly come out with a policy where you are making a common citizen who wants to go for a holiday, which he has not ever budgeted for himself, and then suddenly you tell him that he has to pay 20% tax on that expenditure which he is making, and he has already paid the tax on that money which he is going to spend. So which we call tax on tax. We hate that. You know, please do not take tax on tax. You make a policy which is uniform, rational, and we are always willing as citizens to pay our taxes in the manner you will decide, and you transparently come when you present the budget. You tell us very clearly in front of the parliamentarians that what is that the law will prevail in terms of collection and expenditure for the year. And we always encourage that. We try to tell the government, yes, it's a good show. Okay, do what you have already presented and work on it efficiently throughout the year. We as citizens will help you. And you can see how the tax collections are going up year after year in our country. But we don't understand why such imposition comes all of a sudden on a knee-jerk manner, and then the citizens are taken aback that what is this now?
Right.
What is this 20% extra?
Sanju
Why is
Verma,
this 20% extra?
Today you will be at the receiving end of a lot of heartburn. What is it that the government has against us poor tax-paying people?
Okay. You know, I think Mr. Bijon, he raised some very pertinent points. You know, I will just say this. There's a lot of falsehoods and a false narrative that is being peddled with respect to this 20% tax that will be, taken at source. I just want to say a couple of things here. First and foremost, this TCS of 20%, this has been levied not now. It has been in practice way back since 1961 under the income tax rule of 1961. And the Liberalised Remittance Scheme That came into vogue in 2004 after the SEMA came into vogue in 2003. Now, why is it that this is being discussed now? Is that till now, since 2004, there was a disparity in terms of how credit card spends internationally and debit card spends internationally were treated. If you spent, say, $2,000, let's take exchange rate of 83 rupees. You know, that translates into something like 1,66,000 rupees. Now, if you spent your money by way of a credit card, you had to pay the TCS. But if you spent your money, say by way of a debit card, or in some cases by way of a forex card, or in some cases by way of, say, a traveler's card, then you were given preferential treatment. So debit card holders gained at the expense of credit card holders who spent an equal amount of money on foreign shores. So what the current treatment of 20% TCS will do is, it will bring parity between money spent via either a credit card or a debit card, point number one.
Okay.
Point number two.
No, I'm sorry I'm interjecting you, but because it's a slightly complicated issue for people to understand, let's go point by point. What was the need for bringing this parity?
Yeah.
The need for bringing this parity is, you tell me, I mean, whether you are a credit card holder and you spend money on foreign shores, or you are a forex card holder or a debit card holder, why should there be disparity in tax treatment? There is no good reason for this disparity to exist under the SEMA rules of 2003.
Okay.
Under the Liberalised Remittance Scheme rules of 2004.
Let's take that one by one. Hold your horses on the second point that you were about to make, but Ankit Jain, what do you have to say to that?
Yeah, it's very interesting, but I would like to clarify one thing. The 20% TCS which has come, it has not been in place since 1961 or 2004. This has been brought in specifically in the budget which was presented in February 2023. So before that, the TCS was applicable of 5% for LRS which was above 7 lakh rupees, or towards payment of overseas tour program or travel foreign tours of 5%, but the rate was only 5% at that point of time, and the threshold of 7 lakhs which has been reinstated was only applicable. And this was also brought in, I think, in the year 2020 or 21. Before that, there was no TCS on Liberalised Remittance Scheme or any foreign payments or even overseas tour program. Now, in this budget 2023, that the rate which is 20% that has been applied, that is something which has become quite a big challenge. And the second problem, of course, which is now becoming because of the amendment that the RBI has made, wherein even credit card payments are going to be covered under LRS, that has complicated the problem. I'll step back a little. I'll just briefly explain what LRS, what is the implication of LRS. In general, foreign currency in India has always been regulated, and if you needed to make any trade in purchase or sell any foreign currency, you needed to take the permission of RBI. But for the sake of the citizens, the limit of a liberalized remittance scheme was allowed, wherein amount of 250,000 up to an amount of $250,000 for specified purposes, an individual resident can make or receive payment, make payments without any problem. Now, in this, any payment which was any payment of foreign currency, whether it be made in India, whether it be made outside India, whether it be made a credit card, by debit card, all of it was covered under the Liberalised Remittance Scheme, except if you were traveling around outside India, and if you're swiping your credit card outside India for your tour and for your eating and everything, that was not covered in the Liberalised Remittance Scheme. Now up till, as I said before, up till March 2000, in fact, even today, in the latest budget, before this latest budget, if you had spent outside, even like purchased or anything outside India, then no TCS would be applicable. In this budget, what they have said, TCS of 20% would be applicable on each and every transaction, irrespective of any basic threshold.
Okay.
So even if you are spending maybe mere $20 or $30 or $40, anything online or anywhere, TCS would become applicable on such payments
Sanju Verma,
completely.
what do you
Before
stand to
that,
gain
there was
from
a limit
this
of
change?
700,000 rupees.
Okay. You know, I think the gentleman before me, he made some very valid points. I think He's a tax practitioner. He's right that, in some cases TCS has been levied of late, but in many cases for manufacturers dealing in alcohol, forest products, scrap dealers, TCS has been in practice for the longest time. But that is not relevant to our discussion. What, Mr. Jain, I'm sure he will agree with me on this. The good thing is that though the government will collect 20% TCS to curb money laundering via the LRS scheme, which has been in vogue, and the government needs to clamp down on that, you can always claim a tax credit on the 20% additional money that you spend. I will just explain with a mathematical example in 30 seconds. Suppose I have spent $2,000 at the rate of 83. That is 166,000 rupees. But now 20% extra mujhe dena padega. So I will have to actually pay 199,200 rupees. Now suppose I'm filing my tax return. Most of us file quarterly tax returns. We make advance tax payments. Now suppose you have filed a tax return in a particular quarter of 4 lakh rupees. In that 4 lakh rupees, you will get credit of this additional 33,200 rupees, the additional 20% that you paid when you converted $2,000 at the rate of 83. Instead of 166,200 rupees, you were actually paying somebody 199,200 rupees. You will get back the tax credit on the additional 20% or the additional 33,200 rupees that you've spent.
If it can be reimbursed, if it can be claimed, then what is the problem?
The problem very clearly is a simple one. Why do I need to pay the tax and then wait to get the credit? It simply doesn't make sense. The fact is that what Bijon said, the tax on tax concept, the fact that 5% was the earlier tax, you've hiked it up to 20%. It simply is a tax on people who have to pay the tax first and then wait for their credit. But that is not the way smart countries with the kind of foreign exchange reserves that we have do their taxation. I don't understand the reason why a forward-looking India that is Atmanirbhar and marching towards 2047 wants to find little niggling ways to make life difficult for anyone who travels abroad on business.
Yes, Sanju Verma, all the questions are for you today. You'll get to answer all of them. Please go on.
No, Mr. Cherian, I just would like to humbly correct you on one point. This is not a tax on tax. We are not talking of cascading effect of taxes here. We are not talking of double taxation. As I said, the 20% that you are paying additionally to say your tour operator, maybe Agoda or Make My Trip or whosoever, that 20% you get back when you file your advance income tax return. So what's the problem? In the end, you are not actually spending out of your pocket because you're claiming the entire extra money that you spent as tax credit. You're getting a tax credit back. So what is the problem? You're not spending the 20% extra.
Okay, let him, yes. Let him rebut.
You cannot miss the fact that you first have to pay the tax.
Let him get back on that question. Yes, sir.
Even in your enthusiasm, Sanju Verma, you cannot back off from the fact that you have to pay the tax in the first instance. Wonderful. You will get credit. But why do you want to have the ordinary citizen of this country go through this? I can understand you having a 5% levy on the $250,000 that you are allowed to remit if you take the LRS scheme. To hike from 5% to 20% itself is, to my mind, extremely usurious.
Okay.
Secondly, even if the process is, as you said, when you pay advance tax, I think that there is something palpably wrong with this way of looking at your finances.
Okay, we've heard the experts. I will come back to you, Sanju Verma, as well as Kailash Adhikari. Let's get our viewers on board, who I would like to call the victims in this case. A.K. Srivastava from Gurgaon, sir, what do you have to say?
Good evening, everyone. Let me first of all clarify the concept of tax, TDS and TCS. These are the taxes deducted at source or collected at source in advance against your possible tax liability. So whatever tax is collected or deducted is squarely adjustable against the tax you finally have to pay. And if suppose, for example,
So are you
have a tax
okay with
liability
this?
of-
Are you okay with the changes?
Yeah, it's okay. It's okay. It's very much
Why?
okay. You see,
You don't think it is going to pinch you?
No, definitely not. You see, if I am going abroad, I expect to spend X amount of money. I will take foreign exchange from here itself. Pay the applicable tax here.
And
Then-
and you don't see that as extra paperwork, extra hassle,
No,
unnecessary hassle maybe?
nothing. Everyone, whenever I have traveled abroad, I have taken foreign exchange in advance in India itself.
Okay.
I have also in some countries I've used
All right.
cash cards.
That's one
So you
opinion
have
there
a-
which supports Sanju Verma. Ravi from Bengaluru is also on the broadcast with us. Sir, quickly tell us what you have to say.
Yeah, hi. I think there are two major decisions today on financial aspect which the central government has taken. One is about the banning of or withdrawal of 2,000 rupee note, which I very much welcome. And the other one is this, which is really a pinching on the normal people's pocket, right? Because I've traveled abroad for a couple of times. I mean, it pinches me when I have to pay 20% tax. I mean, levying tax 20% is completely different from giving a tax rebate after you file your taxes and then claim it back. That's a different ball game altogether, right? I mean, I 99% of the times I agree with Sanju Verma, but this time I respectfully disagree with her because giving back the tax is not the same thing as levying it, right?
Kailash Adhikari, who's the MD of governance now, my question to you is, do you think this is a case of trying to regulate something which could have been avoided, that the benefits here are, the disadvantages here quite outweigh the benefits?
No, it is not that. See, firstly, we need to understand the concept of TCS and TDS, which was mentioned some time ago also. The entire idea of TDS came into practice in 1922, where the idea was that when after the end of the 12 months, when a person or a company files a tax return at that time, and they find ways of escaping the tax, then it is better that the government who runs the machinery runs on the tax that it collects, it is better to collect at source. So whether it is tax deducted at source, which happens in business, which happens in the case of salary, it is in the case of tax collected at source. If you're paying for it, you pay that 20% and actually you get a rebate for it. And as businesses or as individual or as salaried people, we are used to TDS. So why the hue and cry about TCS?
We are used to a lot of things, sir. We are used to being hurt by a lot of things, a lot of taxes happening for which we do not get the proportionate services. But Sanju Verma, how much tax are you aiming to collect from this move?
I think what we need to understand is that whether it is tax deducted at source, TDS, or tax collected at source, TCS, these have been in vogue. And there are ways in which tax is collected by the government and resources are transferred from the seller to the buyer or buyer to the seller in an economy. And then later on, the ultimate incidence of taxation, if it falls on the seller or whether it falls on the buyer, based on that, one gets the tax credit and one sees a negative entry in his or her books. So I don't think there should be so much of halabaloo on this.
He is the only one that sees negative entry in his books. But thank you, everyone. I've unfortunately run out of time on this broadcast for joining me. Thank you also to Sanju Verma. We take a very quick break.